And now, it's time to check the headlines that were in your inbox last night with Michelle from Payometry Labs.
Welcome to your inbox last night, the Fintech news podcast that saves you from reading way too many newsletters. It's March 13th, 2025, which, as you already know, is National Good Samaritan's Day. Today we're talking about the Fed's new report on credit cards and why regulators are on high alert, the stablecoin wars heating up ahead of Trump's crypto legislation, Visa's new anti-scam task force, is it a game changer? And why cash is vanishing from stores faster than ever before. Buckle up. We've got a lot to cover, so let's get started. Let's begin, as we always do, with the top headlines for today. AI-powered payments are the future. Fintech Wrap-Up reports that AI is reshaping payments by enhancing fraud detection, automating payment flows, and personalizing customer experiences. Banks and fintechs are betting big on AI to cut costs and boost transaction efficiency. Wells Fargo is suing JP Morgan over a $481 million loan. Banking Dive reports that Wells Fargo is going after JP Morgan in court over a commercial real estate loan gone wrong. This could set a precedent for how big banks handle distressed property loans. UK regulators are scrapping the payment systems regulator. The Paypers says the UK government plans to abolish its standalone payment watchdog, shifting oversight duties elsewhere. Critics warn this could reduce scrutiny on big payment networks. All right, let's dive into today's big story, the Federal Reserve's massive 75-page deep dive on credit cards. The short version? Credit card debt is at an all-time high, fees are rising, and regulators are watching closely. Americans are relying on credit more than ever. Balances have surpassed pre-pandemic levels. Late fees and penalty APRs keep climbing, despite consumer pushback and regulatory scrutiny. AI-driven underwriting is the next frontier, with banks using machine learning to approve and deny credit faster than ever. So what happens next? Regulators are hinting at new credit card rules, while fintechs are doubling down on alternative lending models. Now, it's time for the new star of the fintech world, and of course, favorite segment, Mr. X Speaks. If you're new here, Mr. X is our anonymous fintech insider with the scoop on the industry's biggest secrets.
Well, folks, this is a small story, but it sure does pack a punch. Looks like stablecoins are in for a showdown. Word on the street is that Trump's incoming crypto legislation is forcing Tether, Circle, and Axios to cozy up to Washington power players fighting, as one does, to curry favor with the king. You ever seen grown adults trying so hard to make spectacles of themselves? Yeah, me neither. Ain't that a sight? And speaking of stablecoins, did y'all notice the market cap just hit a record $234.8 billion? That's an all-time high. That is, unless the crash and fall of the stock market, the tanking of the price of Bitcoin, and the impending global apocalypse should somehow tamp that down. Well, between firings and shenanigans, there'll be more to report to y'all tomorrow. Hold on to your digital wallets until then, folks.
Moving on now to market movers and industry trends. Visa announced that it has launched a scam disruption task force. The anti-fraud team has already prevented over $350 million in scam transactions. The Paypers is saying GoCardless partnered with iPlicit to expand direct debit payments. This move aims to simplify business cash flow management and increase payment options for accounting software users. According to Payments Dive, Intuit has unveiled Phone Tap Card for small businesses. The new card is designed to streamline recurring payments and reduce transaction friction. And Fintech Blueprint explains, Coinbase is eyeing the futures market for DeFi. Fintech Brain Food reports that Coinbase wants a bigger slice of the derivatives market, signaling a major expansion into DeFi futures trading. William Blair says Fintech needs to think long-term. The investment firm argues that Fintech should prioritize sustainability and regulatory adaptation, not just growth at all costs. Before we wrap up, let's run through the quick hits. Affinipay's legal industry report says Fintech is transforming law firms. Lawyers who adopt online payments see increased client retention and faster payments. A super innovative new product from Exala, who is launching a loyalty as a service for game developers. This platform helps gaming companies create rewards programs to retain players. Cash use keeps shrinking. Now just 15% of in-store transactions. A Worldpay report confirms digital payments are dominating global commerce. UK Treasury rejects a Bitcoin reserve. UK regulators say crypto is too volatile to hold as a national asset. I know, where do they get this stuff, right? And that's a wrap on today's FinTech roller coaster. If you love this episode, smash that subscribe button like a hedge fund manager shorting meme stocks. And if you didn't, well, you probably work at the CFPB and don't appreciate sarcasm. Our private LinkedIn group for executive members launched this week. For access to exclusive press availabilities, job offers, and access to industry insiders, upgrade to become an executive member today. Our executive members community is the one place where fintech nerds unite to argue about stablecoins, AI, and why banks still use fax machines. Kind of like the restaurants upstairs at the Venetian Doing Money 2020, but without the awkward attempts to hide the fact you didn't pay for a badge. The link to upgrade is at the end of this video and in the show notes. Until next time, keep your fraud alerts on, your wallets digital, and your stablecoins actually stable. See you tomorrow.